Recognition and measurement of an impairment loss. An impairment loss is recognized where the carrying amount is greater than the recoverable amount. You know it. You know that when the carrying amount is greater than the recoverable amount, the asset is overstated. So we have to recognize the impairment loss. Now, the accounting treatment for the impairment loss is dependent on the model that you apply for the subsequent measurement. Okay. So let's take one example. I'll take one example from what you know rather than taking an example from what you don't know. Okay. So you know PPE, right? For the subsequent measurement of PPE, you can use either cost model or revaluation model, right? So let's take that example. PPE subsequent measurement. We can use either cost model or revaluation model, right? So assume that we have an impairment loss. So in the cost model, it is treated as an expense. Okay, it is treated as an expense. So how do we write the journal entry? Impairment loss account debit. Impairment loss account debit. This is another expense. Right? This is another expense. Now one thing that I want to highlight here is, now I told you Lamai, the difference between depreciation and impairment loss. Depreciation is a systematic allocation of the depreciable amount of an asset, right? That applies to the amortization as well. It is also a systematic allocation. Now the impairment loss is compared to the depreciation, it is not a systematic allocation or systematic reduction, right? In summary, depreciation is a systematic reduction of the asset value. Simply, impairment loss is a non-systematic reduction of the value of the asset, right? So in the case of depreciation, depreciation expense is recognized in the category of the expense where that asset is related to. For example, the motor vehicles depreciation, distribution vehicles depreciation are recognized in the distribution cost. Okay, distribution vehicles depreciations are recognized in the distribution cost in the relevant function, right? But the impairment loss of distribution vehicles are recognized in other expenses. Got it? Depreciation of distribution vehicles are recognized in the relevant functional category of expense, that is distribution cost, but the impairment loss is recognized in other expenses. Another example, depreciation of office equipment is recognized in administrative expenses, whereas impairment loss of office equipment is recognized in other expenses. The reason being, Lamai, depreciation is a systematic value reduction. On the other hand, impairment loss is non-systematic value reduction compared to the depreciation. Okay, so here Lamai, this impairment loss goes to the other expenses, right? And can you remember when we record the depreciation, depreciation expense account debit, accumulated depreciation account credit, right? You can remember the double entry, depreciation expense account debit, accumulated depreciation account credit. Similarly, impairment loss account debit, we don't directly credit to the asset account as we do for the depreciation, right? There also we don't directly credit to the asset account, we credit to the accumulated depreciation account, right? Similarly, here accumulated accumulated impairment loss. Accumulated impairment loss account credit. Okay. So Lamai, in the cost model, the impairment loss is treated as an expense. Right? This is an expense in the cost model. So how do we account for that? Impairment loss account debit, that is another expense. Accumulated impairment loss account credit. Now we have two accumulated accounts. One is accumulated depreciation, the other one is accumulated impairment loss. Two accounts, correct? Accumulated depreciation and accumulated impairment loss. So practically you can combine these two accounts. What are the two accounts? Accumulated depreciation, samuchita share, accumulated impairment loss, samuchita hanikarana labha. So you can combine these two accounts, right? You can, but alternatively you can keep two accounts, doesn't matter, right? But sometimes we combine these two accounts and maintain a single account. In that case, the name of the account is accumulated impairment loss and accumulated impairment loss and accumulated depreciation. Accumulated depreciation account credit. I think it is clear, because from the depreciation we create accumulated depreciation account. For the impairment loss we create the accumulated impairment loss account. So we can combine these two accounts, and depreciation as well as impairment loss can be recorded into the same account. Then the name of the account can be renamed as accumulated impairment loss and accumulated depreciation account, right? Credit. So in summary, Lamai, in the cost model, the impairment loss is treated as an expense. So simple impairment loss account debit, that is another expense. Accumulated impairment loss credit. In some cases we can combine the accumulated impairment loss and accumulated depreciation account together and can maintain a single account. Then the name of that account is accumulated impairment loss and accumulated depreciation account. Got it? Right. Now, if you are using the revaluation model, this one, for the subsequent measurement of the asset, take the example of PPE, right? The impairment loss is treated as the revaluation deficit. Here treated as, I mean the impairment loss is treated as a revaluation deficit. Revaluation deficit. Okay. Now can you remember the accounting treatment for the revaluation deficit as per the LKAS 16? Now I think that you have watched the video which is uploaded to the LMS relating to the PPE, and also you know it because you learnt it at advanced level as well, the accounting treatment for the revaluation deficit. Now if it is the first time revaluation, the deficit is recognized in the other expenses, right? First time, I don't teach the accounting treatment for the revaluation deficit here, Lamai, because it is covered in the video which is uploaded to the LMS, right, under the PPE chapter, right? So first time the revaluation deficit is treated as an expense, right? But in the second time or in a subsequent time, if you have a previously recognized revaluation surplus, okay, if you have a previously recognized revaluation surplus, first you have to reverse the previously recognized surplus in the same place where it was originally recognized. කලින් ප්‍රත්‍යයගණනයෙන් ප්‍රත්‍යයගණන සංචිතයක් තිබුණා නම් මේ ඩෙෆිසිට් එක දැන් impairment loss එක consider කරනවා කියවනේ as a revaluation deficit. So impairment loss should be treated as or should be used to reverse the previously recognized revaluation surplus in the place where it was originally recognized. කලින් හඳුනගන්න තිබුණ revaluation surplus එක හඳුනගත්ත තැනම reversal එකක් ලෙස සලකන්න ඕනේ. But if the impairment loss is more than that, right, if the impairment loss is more than the previously recognized revaluation surplus, the excess amount of the impairment loss is recognized in other expense. I think that you are clear about the accounting treatment for the revaluation deficit. First time other expense, second time if you have a previously recognized surplus, reverse it, and if you have excess of the deficit, treat it as another expense, right? So I don't explain it further because it is covered, as I told you earlier, in the PP chapter, right? Okay, so I think this is clear. And here also I told you the impairment loss is recognized in the other expense, not like depreciation, right? Depreciation is recognized in the relevant functional category of the expense. Okay, right. And in the slide it says, that's why the second point says where the asset is accounted for under the cost model, the impairment loss is recognized immediately in the profit or loss. Where the asset is accounted for under the revaluation model, the impairment loss is treated as a revaluation decrease, revaluation deficit, in accordance with other standard, for example LKAS 16. Any subsequent depreciation or amortization, ළමයි depreciation share කියන එක අදාළ වෙන්නේ PPE වලට, depreciation relate to the PPE, amortization ක්‍රමක්ෂය කියලා කියනවා, amortization relate to the intangible asset. Same process but two different names. Depreciation for PPE, amortization for intangible asset, right? Same process. Now any subsequent depreciation or amortization is based on the new recoverable amount. Now for example if you revalue an item of PPE, after the revaluation you need to depreciate the asset based on the revalued amount. ප්‍රත්‍යයග්‍රහණය කරලා පස්සේ ප්‍රත්‍යයග්‍රහිතගේ මත නිශ්චය කරන්නේ. Similarly, once you recognize the impairment loss, the subsequent depreciation or amortization should be based on the new recoverable amount, right? Because ළමයි, if I go back to a previous example, so let me take this example. In the activity 1, we recognize the impairment loss of 200,000, right? So the carrying amount was 3 million, we recognize the impairment loss of 2.2, so the new recoverable amount is 2.8, which is exactly equal to the recoverable amount. Now what did we do? We brought the carrying amount of 3 million to the recoverable amount. මේක මේ දක්වා ගෙනාවා. හරි? Now the subsequent depreciation or amortization, if it is an intangible asset, is based on this new recoverable amount. නේ මේක කපා හැරෙට පස්සේ දැන් තියෙන මේ ගානනේ. ඒ ගාන මත තමයි subsequent depreciations or amortizations should be calculated. I think that is clear. Okay, let's go to a question. This is based on the cost model, recognition and measurement of impairment loss, example cost model. If you have the slide, you may highlight the wordings cost model, right? Cost model. Example says an asset has a carrying amount of 1 million, cost is 1.6 million, and the recoverable amount is given as 900,000. Okay, so let me take the summarized information here. We are in the example, right? Example, right? The carried amount is given as 1 million, and here we are given the recoverable amount, right? Recoverable amount is given. Shall I use the thousands? 1 million means in thousands 1000. Here 900,000 means 900. Now here lamai we are given the recoverable amount. No need to calculate the fair value less cost of disposal and value in use, right? Higher of those two values is given as the recoverable amount, right? So we can see the carrying amount is higher than the recoverable amount. Now is our asset overstated? Yes. So do we need to recognize the impairment loss? Yes. So impairment loss is 100,000 because carrying amount is higher than the recoverable amount, right? Now we are in the cost model, cost model. So the double entry for this is impairment loss account debit 100. I told you this is another expense, right? Then accumulated say depreciation, and I'm using the combined account, right? Combined account, accumulated depreciation and accumulated impairment loss, right? Accumulated depreciation and accumulated impairment loss account credit 100. But remember, this is not a must. You can have two separate accounts, two accumulated accounts, but alternatively you can combine, right? This is not a must. You can have accumulated depreciation and accumulated impairment loss accounts separately, doesn't matter. But sometimes we combine these two accounts together, right? So I wrote the journal entry in that way. What next? Activity 2. What does it say? Another example, cost and accumulated depreciation of a plant as at 31st March 2025 were 5 million and 1.5 million respectively. Cost and accumulated depreciation. The fair value less cost of disposal and value in use of this plant on this date was 3.2 million and 3.3 million respectively. Provide the journal entries for the impairment loss. Provide the extracts of the financial statements. Okay, let's do this quickly and let's apply or substitute figures to our model. Okay, I'm doing it very fast. Activity 2, carrying amount. So we are still in the cost model. Now what is carrying amount for a depreciable asset? Cost less accumulated depreciation, right? Equal cost less accumulated depreciation for a PPE. Cost is 5 million. Let me take in thousands, then it will be easy. And the accumulated depreciation is 1,500. So the carrying amount is 3,500. Right? Do it very fast. And we have to compare this with the recoverable amount. So what is recoverable amount? Higher of fair value less cost of disposal and value in use. Right? In this question, fair value less cost of disposal is given, the net value is given 3.2. Value in use is given as 3.3. So what do we select? Higher of these, this one. Okay, so coming back in this diagram, the recoverable amount is 3.3. Oh, in thousands, 3,300, correct? 3,300. Here, don't worry, right? 3,300. Now, when you compare our carrying amount with the recoverable amount, our carrying amount is overstated. Our asset is overstated, so we have to recognize the impairment loss. Impairment loss of how much? 200,000. So the journal entry, impairment loss account debit 200,000, accumulated depreciation and accumulated impairment loss account credit 200,000. Okay, 200,000. And then they ask us to provide the financial statement extracts. So let me write it here. In the income statement, under other expenses, impairment loss 200. Okay, 200. In the statement of financial position, under non-current asset, under PPE, what is this asset? Plant. The new carrying amount is now earlier carrying amount is 3,500, and now we recognize another amount, that is the impairment loss of 200. So it will reduce the asset carrying amount because accumulated depreciation and accumulated impairment loss balance is deducted or subtracted from the asset. So let me take in this way. I'll take the cost and accumulated depreciation separately. So shall I prepare a plant account and accumulated depreciation and accumulated impairment loss account? Can you prepare these two accounts? Plant account and accumulated depreciation and accumulated impairment loss account. Now the plant account has the cost of 5,000 brought forward balance, right? Accumulated depreciation has a balance of 1,500, right? Now we rename the accumulated depreciation account as accumulated depreciation and accumulated impairment loss, combining these two together. Now we recorded the impairment loss of 200, impairment loss account debit, that is an expense, so it went to the other expenses, right? Accumulated depreciation and accumulated impairment loss account credit. So this account is credited by another 200, came from the impairment loss. Got it? I think you can see the figures, right? Now in the statement of financial position, cost of the plant is 5,000, right? The balance of the accumulated depreciation and accumulated impairment loss account is now 1,700, right? Earlier 1,500, now we recognize another 200 impairment loss. Therefore balance of this account is now how much? 1,700. So the new carrying amount, which is the new recoverable amount, is 3,300. It should be exactly equal to the recoverable amount, this one, at the time of recognizing the impairment loss. Okay, so this is 3,300. Got it? Very simple. Impairment loss account debit, accumulated depreciation and accumulated impairment loss account credit. So what did we do here? We have combined the accumulated depreciation and accumulated impairment loss accounts together, but it is not a must. ඒක අනිවාර්ය අවශ්‍යතාවයක් නෙමෙයි. වෙන වෙනම තියෙන්නත් පුළුවන්. Right. What next? We have another example under cost model, activity 3. AB PLC purchased a plant for 8 million on 1st April 2022 with an estimated useful life of 8 years. The fair value less cost of disposal and value in use of this plant as at 31st March 2025, meaning after 3 years time from the purchase, were 4.4 million and 4.5 million respectively. Similar to the previous question, so I'm doing it very fast. Calculate the recordable amount as at 31st March 2025. Calculate the impairment loss, journal entries, financial statements, extracts. Okay, let's do it very fast. Activity 3, still we are in the cost model, right? We want the carrying amount as at 31st March 25, right? Cost less accumulated depreciation. Cost of the asset is 8 million in thousands, 8,000. Accumulated depreciation. The cost of this plant is 8 million and we are not given the residual value. Let's assume it is 0, right? And the useful life is 8 years. So divide by 8, annual depreciation is 1000. Now it is systematic because each year we depreciate 1000, right? Systematic value reduction, okay? So that into how many years? We purchased the asset on 1st April 2024, but we assess this or we do this impairment test on 31st March 2025 after 3 years time. Am I correct? 23, 24, 25 years, 3 years. So the accumulated depreciation as at 31st March 2025, 1000 into 3, 3000, right? So the carrying amount of the asset as at 31st March 2025 is 5000, correct? So we have to compare this with the recoverable amount. What is recoverable amount? Higher of fair value less cost of disposal, value in use. So we are given the two values, fair value less cost of disposal 4.4 in thousands, 4,400, value in use 4,500. We are taking what? The highest of these two values. So the recoverable amount is 4,500. Now it is clear our asset is overstated by 500, correct? So impairment loss is 500. And then we have answered the part 1 and part 2. Recoverable amount is 4,500. Impairment loss is 500, correct? Then the journal entries. Impairment loss account debit 500. Accumulated depreciation and accumulated impairment loss account credit 500. And remember, don't credit the asset account straight away, I mean directly, right? So credit the accumulated impairment loss account without crediting the amount to the asset directly, right? Then financial statements extracts in the income statement under other expenses. Other expenses, impairment loss 500. Although this is a plant, we don't recognize this impairment loss under administrative expenses, right? Because this is non-systematic value reduction. I am always emphasizing that. And in the statement of financial position, under non-current asset, under PPE, plant, cost of the plant is 8 million. And the accumulated depreciation as at 31st March 2025 was 3,000 as I remember. Plus the impairment loss recognized is 500. So now balance of the accumulated depreciation and accumulated impairment loss is now 3,500. So the carrying amount of new carrying amount of the plant is 8,000 minus 3,500, 4,500, which should be the carrying amount. So what have we done? We have brought the carrying amount of the asset of 5,000 to the recoverable amount. Recoverable amount එකට carrying amount එක ගෙනල්ලා තියෙනවා. Got it? Right. Now if you want to depreciate this after the impairment loss, it should be based on the new carrying amount, new recoverable amount. Right. There is an error here, Lamai. The year should be 24-25, right? 24-25. Lastly, part 4, 24-25. Right, what next? Answer? Yes. Let's take the revaluation model. You may highlight the two wordings, revaluation model. Let's take this example and learn this concept using the example. A machine has been recorded at the revalued amount of 1.2 million, revalued amount, right? And the accumulated depreciation of 200,000. So the carrying amount is 1 million, that is given as of 31st March 2025. The recoverable amount of this date was estimated at 900,000, that is given. The first time revaluation resulted a surplus of 500,000. See, the first time revaluation of the same asset resulted a surplus of 500,000. Right. So let's write the journal entries, Lamai. Let me take it to the board. Example, revaluation model. Revaluation model. Example. Carrying amount is 1 million, that is given, 1000 in thousands. Recoverable amount is given as 900,000, right? So there is an impairment loss of how much? Impairment loss of 100,000, correct? Right? But we are in the revaluation model for the subsequent measurement of this asset, right? So impairment loss is treated as a revaluation deficit, right? Now they say there is a previously recognized revaluation surplus of 500,000. Now this 100,000 value decrease should be treated as a reversal of the previously recognized surplus. Okay, මේ 100 සලකන්න ඕනේ පෙර හඳුනාගත් අතිරික්තය අඩුවීමක් ලෙස ප්‍රතිවර්ත කිරීමක් ලෙස රිවර්සල් එකක් ලෙස. Therefore ළමයි it should reverse the previously recognized surplus to the extent of the impairment loss in the place where the surplus was originally recognized. Surplus එක originally recognized කරපු තැනම reverse කරන්න ඕනේ. Now can you remember the place where the revaluation surplus is recognized? Revaluation surplus is recognized where? In the OCI. So it should be reversed. Same like the reversal of revaluation surplus under LKAS 16, right? Therefore, the double entry or the journal entry is now this is treated as a reversal of the previously recognized revaluation surplus, and that reversal should be done in the same place where the surplus was originally recognized. Therefore, OCI debit. OCI debit because the surplus was originally recognized in the OCI, right? So we can reverse 100. We can't reverse 500 ළමයි. 500 reverse කරන්න බෑනේ because this time revaluation deficit or the impairment loss is 100. So we can maximally reverse 100, right? Then the credit entry is same as earlier, accumulated depreciation and accumulated impairment loss account credit 100. Okay, credit entry is same as earlier. ළමයි දැන් හිතන්න just think that in the previous revaluation there was a deficit, not a surplus, there was a deficit. So previous deficit, now also deficit. So where do we debit? Other expenses debit. Got it? Other expenses debit. Right? Now in this case, as we have a previously recognized surplus, that's why we reverse it in the same place. Okay? But if the previous revaluation had resulted a deficit, this time also a deficit, therefore there is no reversal. We have to recognize the impairment loss in the other expenses, right? I think that is clear. So පෙර ඌනතාවයක් නම් තිබුණේ, දැනුත් ඌනතාවයක්, එහෙනම් other expenses. පෙර අතිරික්තයක් තිබුණ 500ක්, දැන් ඌනතාවයක්. ඒ ඌනතාවය පාවිච්චි කරනවා පෙර අතිරික්තය හඳුනාගත්ත තැනම ඒ දක්වා ඒ ප්‍රමාණය දක්වා රිවර්ස් කරන්න. OCI debit. And also you know, whenever you transfer or whenever you put any amount to the OCI, that should be transferred to the revaluation surplus, revaluation reserve end of the period. right? So the transfer entry, whenever you put any amount to the OCI, that should be transferred to the revaluation reserve end of the period, right? You know it based on LKAS 16. Therefore, to transfer this amount, OCI credit 100, revaluation reserve debit 100. That is a transfer entry. Okay, right, that's the answer for the example. That's explained in the slide as well. We are coming to the last activity, activity 4. What does it say? ABC PLC purchased a plant for 8 million on 1st April 2021 with an estimated useful life of 8 years. On 1st April 2023, after 2 years time from the purchase, the plant was revalued at 9 million. On 31st March 2025, after another 2 years time, company carried out an impairment test and it was estimated that the fair value less cost of disposal and the value in use of this asset were 4.5 million and 4 million respectively. Calculate the recoverable amount, impairment loss and the journal entries. Okay, so this is a combination of LKAS 16 and LKAS 36, right? So in this question, these two applications have been combined. So let's, activity 4, let's write a timeline like this. We purchased the asset on 1st April 21, right? Cost is 8 million in thousands, 8,000. Useful life 8 years. Residual value not given, 0. After 2 years time, 1st April 23, is it? Yeah, we are revaluing the asset, or we revalued the asset to the first time, right? So revalued amount is 9 million. So let's calculate the revaluation surplus or deficit on this date, right? So surplus or deficit is always equal to, let me take the fair value here, because we revalue, normally we revalue at the fair value, right? So surplus or deficit is always equal to the fair value minus carrying amount, right? Now we revalue the asset at 9,000, so the fair value is 9,000, carrying amount, cost is 8,000 minus accumulated depreciation. So it is after 2 years time, right? So annual depreciation is, cost is 8,000, no residual value is given, let's assume it is 0, divided by useful life 8 years, so for a year 1,000, that into 2 years 2,000, because here the gap is 2 years. After 2 years time we revalue the asset. Got it? So accumulated depreciation at the date of revaluation, which happened on 1st April 2023, 2,000. So the carrying amount is 6,000, but the fair value or the revalued amount is 9,000, right? So there is a revaluation what? Surplus. Why? Positive figure, right? Value increase. So surplus is 3,000. I am doing it very fast. Surplus arised on 1st April 2023 is 3 million. Okay. Now after 2 years time, let me take it here, 31st March 25, we carried out an impairment test, right? Now impairment test, we have to take the carrying amount on this date. Carrying amount on this date. So what is carrying amount, Lamai? Now if you can remember the PPE, the carrying amount of an asset under revaluation model, I mean after the revaluation, is equal to the fair value less subsequent accumulated depreciation. Okay, carrying amount of the asset after the revaluation, if you can remember, right? If you can't remember, please watch the LKAS 16 video once again. So carrying amount of the asset after the revaluation is equal to fair value less subsequent accumulated depreciation after the revaluation, right? So the fair value is 9,000, subsequent accumulated depreciation after the revaluation. Now this one fair value is 9,000, no residual value is given, let's assume it is 0. Now you know after the revaluation lamai asset is depreciated based on the remaining life, remaining useful life, right? You know the revaluation adjustments. So here 2 years have been gone out of the 8 years. So they don't say that the useful life has been changed. There are no estimation changes. Therefore, we have to assume still that original 8 years is applicable. However, 2 years have been gone. Okay, 2 years have been gone. Now I am calculating the depreciation for this period. Got it? Because we want the carrying amount on this date. So after the revaluation, 2 years have been gone. So we have to calculate the accumulated depreciation for 2 years after the revaluation, right? So originally life is 8 years. Of that 2 years have been gone. 2 years have been gone. So when you depreciate the asset after this date, right? So the remaining life is 6 years because 2 have been gone. Therefore on this date the remaining life is 6 years. Got it? So this is divided by remaining life 6. Then for a year, is it 1,500? 9,000 divided by 6 years. Yes, for a year 1,500. But there are 2 years, 23, 24, 24, 25, right? Therefore subsequent accumulated depreciation rate, see, so this into 2 years it is 3,000. So here 3,000. Got it? Therefore carrying amount of the asset as at 31st March 2025 is 9,000 minus 3,000, 6,000, right? That is basically PPE applications, right? PPE applications. Revalued here, we found the surplus of 3,000, and then after the revaluation we wanted the accumulated depreciation. So it was depreciated based on the fair value minus residual value divided by remaining life. Total life 8 years, 2 years have been gone as of this date. So as of this date the remaining life is 6 years, 8 minus 2, right? Therefore 9,000 divided by 6, 1,500 a year. Now 2 years have been gone after the revaluation when we undertake the impairment test, right? So 1,500 into 2 years, accumulated depreciation for this period is 3,000. So the fair value minus subsequent accumulated depreciation is 3,000. So the carrying amount is 6,000. So we have to compare this with the recoverable amount. So what is recoverable amount? That's given. No, we have to find higher of fair value less cost of disposal and value in use, right? Fair value less cost of disposal 4.5, meaning 4,500. Value in use 4 million. In thousands 4,000. So select the highest is this. When you compare these two values, our carrying amount is overstated by 1,500. So impairment loss is 1,500. Impairment loss is 1,500, correct? 1,500. And then they ask us to provide the journal entries. Where do I write it? Shall I write it here? Take in a different color, then you can see the answer in the same screen. Third one, journal entries. Now there is a previously recognized surplus which happened on 1st April 2023, 3000, right? So this time an impairment loss of 1500. So as we are going with the revaluation model, it is treated as a revaluation deficit, right? So we have a previous surplus, so we have reversed it. Maximally we can reverse 3000, right? And it should be, the reversal should be done in the same place where the surplus was originally recognized. So this was originally recognized in the OCI, therefore OCI debit. But how much, Lamai? Can we debit 3000? No, because subsequent revaluation deficit is 1500. So we can reverse 1500. 1500 accumulated impairment loss, or we can say accumulated depreciation and accumulated impairment loss account credit 1500, right? 1500. Okay, then the transfer entry, OCI credit, it is a transfer entry, credit 1500, revaluation reserve debit 1500, correct? Just imagine the impairment loss is 3500. Just imagine that this loss is 3500. How do we write the entry? Okay, we can maximally reverse 3000. So OCI debit 3000, right? OCI debit 3000, but impairment loss is 3500. Just imagine, right? Impairment loss is 3500. So excess of previously recognized surplus, වැඩි ටික තියෙනවනේ 500, that should be recognized as an expense. Therefore impairment loss account debit, other expenses debit, right? Other expenses debit. And accumulated depreciation and accumulated impairment loss credit 3500. මේක 3500 වුණා නම් 3000ක් reverse කරා OCI debit 3000යි, වැඩි ටික other expenses, again impairment loss, එහෙම නැත්නම් other expenses debit 500, total accumulated depreciation and accumulated impairment loss credit. Then transfer entry, OCI credit 3000, revaluation reserve debit 3000. Okay, I hope that is clear. That is treated as a revaluation deficit. You have to have the knowledge on the revaluation deficit accounting treatment, right? So with this video I covered the first part of the impairment of asset, particularly the individual asset. But sometimes we can't impair the individual asset. We want to look at the cash generating unit, group of assets, right? We'll cover that part in the second part of this chapter. Yeah, that's the end of the first part, and I hope that you have now good understanding about the impairment of asset. Right, let's meet in person to cover the part number 2, right? Okay, then thank you everyone.